We all love to live long, prosperous in our lives, enjoy with families. As a responsible member in the family, we always protect our family and its interest. However, have you ever wondered if your absence will attract a financial risk to your near and dear ones? And a highly preferred tool to minimize the risk is life insurance. Hey, I am Monali, your host for this episode of Financially Speaking Conversations powered by IndiaFirst Life. Saving smartly, investing in suitable insurance plans, and managing expenses wisely are a good starting point to build financial protection from the unforeseen future risks. To understand what is the risk in most simple words from customer and company point of view, I have reached out to Mr. Amrish Maheshwari. Mr. Amrish is Chief Risk Officer at IndiaFirst Life Insurance. He has a rich experience of more than 20 years in financial industry. Welcome, Amrish.
Thank you, Monali. When you manage life's risk with life insurance, you give yourself and your loved ones the power to face the ups and downs of life confidently. And you should also understand while purchasing life insurance, companies check various conditions such as health, occupation, lifestyle, etc. There are certain reasons for the same, and I am happy to help you understand both sides of the coin.
Great. Let's get started with customers' point of view. Please help us with what is the role of life insurance in risk management.
Life is full of uncertainties, and we should always abide by the fact that every aspect and decision in life has an inherent risk involved, and the key to manage and mitigate the risk, not to avoid the risk. In simple terms, risk management refers to identifying and controlling the risk surrounding your decisions and actions. There are three potential areas where life insurance policy can help. The first and foremost, insurance policy as a tool helps securing your family's future. What I mean by that, in case of any untoward incident, life insurance policy provides the necessary aid to the families. Second, fulfilling financial goals. Every individual has goals related to higher education of children, marriage of children, financial security for the future. The insurance policy as a tool helps building such corpus to meet the future needs of the expenses which are going to incur towards these aspects. Last but not the least, insurance policy also helps encouraging savings and investments. There are products like unit linked insurance plans which offers the dual benefits of insurance as well as the returns or savings in line with market by minimizing the risk.
Absolutely. Managing the risk associated with an individual life is even more important as no one wants their family to suffer in their absence. And future growth is also a necessity. Now, please tell us risk management from company's point of view.
That's a very interesting subject, Manali. And I'm sure you must have heard about terms like pre-existing illness, diseases, risk classification, underwriting. Have you?
Yes, I have read them on many insurance websites while reading in details about the insurance plans. Also, I've heard from a life insurance agent. These words sound so technical and complex.
Not to fear. There are basic checks that insurance policy conducts or insurance company conducts to determine whether it should provide your coverage and how much to charge for it. And they do need to know the amount of risk they are insuring. The risk is typically divided into two categories. The first one is how likely you are going to survive during the lifetime of the insurance policy. What's the typical benefit and coverage linked with the financial or earning capability which individual has, or the potential earning capability which individual has? To determine these risks and related premium, or in simple words, the cost which an individual needs to bear, certain factors needs to be taken into account. These factors are age, gender, height and weight, health conditions, family history, occupation, behavior, habits. Company asks the relevant questions about these factors, and depending on the type of the responses, the policy is being offered or the product is being offered. You may have to go through complete medical test also in case of any adverse answers to these questions.
Oh, that is why there are multiple questions in the form asked before purchasing the insurance policy. But what company does with all these information?
Let me try to explain you. So whenever a customer apply for a life insurance policy, the answers provided in the proposal form related to health, lifestyle, occupation, family history are taken into account, and an internal underwriting team will assess the accurate risk class associated with the particular customer and issue the quote along with the premium depending on the type of policy which is getting purchased by the customer. There is a process called underwriting. Underwriting process helps the assessment of risk which is associated with the particular customer. And it's not only the lifestyle risk, but also the financial risk which is associated by insuring the particular customer. And combination of these two will help determining the premium which customer is supposed to pay to the insurance company for the particular policy.
So, how are these customers classified according to the level of risk?
Basically, there are few categories which insurers follow. These are not a standard set of categories. There may be more or less with a particular set of insurer, but there are particular three categories which insurance companies follow. The first being the preferred, which is the lowest risk category, where the people are living a very healthy lifestyle, their habits are decent and good, and they don't follow any adverse habit which typically impacts the insurance premium. The second one is the standard, where people are living average, above average health, or the lifestyle is decent enough for an insurance company to apply the standard rates which are typically being followed in general scenario. The third one is the substandard life, where there are particular diseases associated with the particular customer, or the habit or occupation or family history is adverse. These questions or these classifications helps insurance companies to determine the adequate premium which is to be applied for the particular customer.
Okay, this is so detailed. And what determines the risk class?
So the factors which I mentioned above, but to be specific, one is the age, which is the most important factor. The younger the customer, the lesser the premium. That's one. Lifestyle also plays a very important role. For example, if somebody who is a smoker or somebody who is a non-smoker, insurance companies may charge a differential premium because of the difference in lifestyle of the customer. Third is the family history. If somebody has a family history of prolonged diseases or early deaths, that also insurance company helps insurance company to assess the risk associated with the particular life, and a differential premium may be charged basis the family history. I'm not saying that these are the factors which typically lead to extra premium, but definitely these are the factors important for insurance company to understand to determine the right set of premium.
Okay, so are there any steps that we should take to improve this risk class?
Absolutely. There are a number of things you can do to improve the risk class. The most important is to live a healthy lifestyle, which is very simple to follow. This includes things like eating a healthy diet, exercising regularly, and prefer better habits such as not smoking. If you want to improve your risk class, the best thing you can do is to live a healthy lifestyle and work on health concerns you may have. Making these positive changes will likely result in lower claim.
So, what I understand from our conversation, Amrish, is insurance companies use risk classification to bucket these policyholders, which gives them an idea of the risk of the policyholder and also the amount of the premium to charge them for the policy. Insurance company use risk classification to minimize their risk. Thank you so very much, Amrish, for your time with us today. I'm sure our listeners will agree to this.
Thank you, Manali. It was a pleasure to discuss such a crucial aspect of life insurance, and I do believe that this encourages our listeners to be aware about following healthy lifestyles, mitigate the risk to have better way in the life.
Yes, indeed. Today's detailed conversation has helped me to gain the detailed understanding on importance of risk management while taking this life insurance. Thank you for listening. You can find more such episodes on YouTube and on your favorite podcast. Keep listening and happy learning.